You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. And now, it's time for the show that breaks down the options market from unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block with your host, Mark Longo from the Options Insider Media Group, and co-hosts, Uncle Mike TOSAW from St. Charles Wealth Management, along with Mark the Greasy Meatball Sebastian and Andrew the Rock Lobster GIOVINAZZI from OptionPit.com. And now, get ready to hit the Option Block.
All right, everybody. That music means it is time once again for your bi-weekly options extravaganza known as the Option Block, what the cool kids call the old OB. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-compelling, at least we tend to think so, Options Insider Radio Network. Coming at you on multiple different fronts now, so if you like it on demand, on your device of choice, it's there. It's pretty much on every platform under the sun. If there is an obscure podcasting platform that is somehow not available on that you use, hit us up, let us know. We'll see about getting it available there. Of course, if you'd like to engage live, there is the plus for you folks throughout the week. And if you want to go above and beyond, you want to get all the live, you want to get exclusive shows, then we got the secret club for you. You know where to go to learn more about all that fun stuff, theoptionsinsider.com/plus or/pro, depending on what floats your boat. I do have to have them make a secret club. I just haven't gotten around to it yet, but that's coming. Secret club URL is coming, listeners. And of course, wherever you are, live after the fact. If you're after the fact, make sure, if you like what you hear, keep rating and reviewing in your platform of choice. It does help the legion of new people who are out there looking at the games and the AMCs and everything else and saying, what the hell is going on in this market? It does help them find a path to our door. And hopefully, we can help keep them around in the options market for a little bit longer. And if you have questions, keep hitting us up. If you are in the secret club, though, you do get bumped to the top of the list. We like all of you folks out there, including all you secret handshake folks out there. And of course, let's see who we're hearing from on the old show today. First, let's go out to the hinterlands of St. Charles, where we are joined once again by the uncleest of Mikes, Mr. Uncle Mike TOSAW from St. Charles Wealth Management. Uncle Mike, welcome back to the program. How go things in the modern-day paradise of St. Charles, sir?
All is well. No clam piracy to report on the Fox River, thankfully. But I did learn that there were pearls in the Fox River 100 years ago when I was watching a documentary on the Fox River the other night on Channel 11, WTTW.
Someone actually made a documentary on the Fox River. Fascinating. So I'm guessing there were pirates at one time then. Someone had to steal all those pearls, sir.
They must have. I mean, it was 100. It was just in Elgin, just maybe about 15 miles north of where we are. But I learned something interesting about the Fox River Valley.
Yeah, if you know anything about Elgin and its environs, full of pirates. So stay away from those parts. And you know what? There are some parts of the U.S. we've been forced to stay away from for a couple of weeks now. But I am pleased to see we are back there once again. In fact, our chat is restless. They're anxious. Nichols wants to know, how's the Rock Lobster faring these days? Well, I am pleased to report that after a hiatus from, let's just say, some modern-day illness-related issues, we are finally back on the shores of Maine to the fortress-like GIOVINAZZI compound, where we are joined once again by the rockingest of lobsters, Mr. Andrew G. from OptionPit.com. Mr. Rock Lobster, welcome back to the show, sir. It has been too long. How are things out there in the land of Maine, sir?
It is going well. The clam, excuse me, there will be coughing. The cough just never goes away. Never goes away. So you're like, it's kind of like the color of your room, just stays around forever.
So I'll make sure to make you laugh as much as possible today.
Exactly. And and try to extricate what's left of the junk in my lungs. Anyway, I'm good. Things are fine.
There we go. The Rock Lobster. It's important these days, even out there on the hinterlands of Maine. These things can get at you. So we like all of our listeners. We want you to all be around, be listening to us for quite a long time, and be safe and happy and live long and productive lives. So protect yourselves out there. Even on the shores of Maine, far off in the hinterlands, this stuff can still reach out to you. So protect yourself. Be smart as we keep on rolling right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody, welcome to the Trading Block, the portion of the show where we break down what the heck is trading out there, what is lighting up our screens. And it seemed like things were looking a little bit dire earlier in the session. Most of the major indices were selling off pretty aggressively, off around 0.5% or pretty close to that range. As we're coming into showtime, it seems like some of that sell-off has mitigated a bit. Most of the major indices have bounced off their lows now, as they tend to do on most of these sell-off days. Not all, but most of late. Whenever there's a sell-off, it's just BTFD kicks in and we rally again. All right, now S&P is off about 0.25%. We have the Dow off about 0.2%, NASDAQ off a similar percent out there. And of course, all that means VIX was on rally ho mode earlier in the session. Let's see, how high did we get intraday? Looks like we got up to just kissed a 19 handle, 1901, before we gave up the ghost, and gave up the ghost pretty hard. It was back to a 17 handle about less than 20 minutes later. So just a brief kiss, a brief visit with the 19 handle, getting up in some more exciting zones in the Rock Lobster land before giving it back up. Come into showtime, we're at about a 17 3/4. That puts VIX up about 3/4 of a point from where it was on Monday's show, even though, of course, things got higher in between. And even this morning, VVIX, which is the vol of vol, getting frothy again. Remember, I toss this number out for a reason, listeners, when we do those what's more volatile polls. Remember VVIX. Just let it float around in your back of your mind. When's the last time it was below triple digits? Hint, it's before the pandemic, so it's been a while. So when you throw all these other ones out there, I know Bitcoin can be volatile. It can flirt with triple digits sometimes, but it's been mostly in the 80s, if not lower, of late. So Bitcoin was your choice. But if you're questioning that, just see where VVIX is first before you do anything else. That's up about a point from on Monday's show. VXX, a product you guys like to fade, getting back some of that fade this week. Up almost 0.5 point, about 0.4 of a point. It was a little bit shy of the 27 handle coming into showtime, about 26.90. And VolQ, speaking of VolQ, we have the creator of VolQ. We had Scott Nations on our Pro Q&A session yesterday. It was a great one. So if you folks missed it, of course, if you're in the Secret Club, you can go check out the archive there on the Pro podcast feed. And if you're not part of the Secret Club yet, you're missing out on cool stuff like that. You had a chance to pick his brain yesterday, but you can go listen to it after the fact if you join up. Now they're all available for all of our Pro members whenever you want to check it out on demand. Of course, you have oddities coming up on Friday and a new Pro Q&A every Tuesday. So you guys are getting doses every week of all sorts of fun stuff, and you can go check out all the people we've already chatted with. It's been a great guest roster through that hot seat there. VolQ 16, up about 0.5 point from where it was this time last week. And again, or last show, I should say. And Scott was really pointing out some interesting opportunities and just some trading ideas and just information that he sees when he's looking at VolQ, which is, of course, just at the money NASDAQ versus things like VIX, and how you can start interpreting what's going on with some of the skew data there as well. It's an interesting idea, an interesting area. I know a lot of you are always looking for new ways to look at and analyze and indeed trade volatility. So again, it was a fascinating conversation. In VolQ, if you're not looking at it, that's why we keep it in our rotation, because it is an intriguing one to keep an eye on. All right, let's go back around the horn. Mr. Rock Lobster, if you can prevent yourself from having a coughing fit, sir, lots going on in the world of volatility. We briefly flirted with some higher zones. Looks like maybe some of that coming off now. But what's been lighting up your tape this week in a week of coming and going volatility, sir?
I think we've been kind of hanging around zone 2-3. So as far as that goes, but realized vol is still very low, like probably 8%, something like that. So once again, we have this same phenomenon, and I actually went over it in my vol trade club last night and with my pro group on Monday, that, the lower this short-term vol is, it creates a very steep forward vol curve for SPX, for the terms, and it makes that basically the lower the vol gets in the front, the higher the forward vol gets in the back, and generates the kind of vol numbers that we're seeing for the futures. And it just hasn't gone away. So from a liquidity provider point of view, they can buy contracts they want short term. So gamma is available. What there isn't available is what I would say the mid to longer term option rider just hasn't materialized in a big way yet when they what they normally do at market tops. So that is a function of this market, this what I'll just call the COVID market. So even though we, TOSAW can still every week say we have all-time highs, you don't have the follow-along premium selling from the big institutions that you normally have that gets fixed down to the 12 handle. So that's what we have. So for me, I'm trying to make sure I stick with more spreads, take profits faster. I'm not looking for the big home run for a 14 or 13 VIX anymore. It starts to ring to the low 16s and I just take my money. I don't wait anymore. It used to be that those contracts you could buy for like 80, 90 cents could go to $3 or $4. But I think now you're lucky if they double, and especially like put contracts in VIX. So you just have to take what the market gives you, and that's what it's giving us. It also doesn't give us big rallies too. So like we're waiting for Powell tomorrow. He's going to say something. And for right now, I think what we just basically have is illiquidity. Nobody wants to really do anything. So you're kind of sitting with the market that you're given. So I think at least as of right now, this is a very like end of summer, low liquidity market with very steep curve because you have like massively dislocated vols between the short term and lack of liquidity in the long term. So, the vol market's just reflecting where the volume in the trade is. And, that's what it is. That's what it is right now. So, if you're looking for that vol crash, I don't think we're going to see it. As far as from a VIX point of view, that lingering vol, the reason why it's there is because that wild card of, as long as like there's the potential for this government kind of shutdown thing, I think that puts a floor on VIX. That number is probably 16, even though it will dip below it in the short term. And I don't think that's going away. Are other market things good as far as, economically speaking? I say look at some of the commodity prices are a little softer. Definitely there's been some pullback there. So the Delta has definitely kicked some growth expectations in the butt a little bit. And I think we're kind of in that sort of continue to be in that wait and see period. So, and I think that's where we are. And I don't see us leaving this period anytime soon, regardless of what Powell says tomorrow.
Yeah, we're in rough shape out there. I was listening to some of the numbers this morning, and as of now, we have double the number of people in hospitals as we did this time a year ago when we were already still kind of in phase 2 or 3 or whatever it was of the lockdown. We thought we had a better handle on this stuff, and now here we are already with double that number of people hospitalized. You're already hearing some states in the South, our ICU beds are not available. You can't get them. They're full. So this thing is contagious. So protect yourselves out there, listeners out there. The Rock Lobster, we're fortunate we have him back. He's doing well. Take care of yourself. Take care of your family. And take appropriate precautions whenever possible. We want all of our listeners out there. It is crazy how these things get political. I don't know why protecting yourself and doing sane public health is a political thing these days. But that's the world we live in. So, c'est la vie. Take politics out of it. Take care of yourself. Take care of your family. Be smart. And hopefully we have all of you out there to listen to us in the future. Mr. Uncle Mike, same question for you. Let's get away from madness out there and let's get into what's lighting up your tape. I know when I turn to you, I can always look for a dose of sunshine, a ray of optimism, to mix my metaphors out there, even on a day when things are selling off. So what is lighting up your tape, sir?
I think this is a wait and see market for Powell tomorrow. I agree with Andrew in that I really don't see the VIX plummeting to single digits by any means, or even much below 16 by any means with it. But I do think that we are going to have some movement in the marketplace, either to the upside or the downside, when the Jackson Hole news comes about, or whatever news comes about from the Jackson Hole virtual conference, or whatever they're calling it this year. So I think that's where we're at right now. I think that where we are right now, this morning, we actually had a little bit of a sell-off on the 10-year note. And when we have something like that, I actually figured that we'd be up on the day when we saw the little sell-off pre-market on the 10-year note. And the reason was I felt that the bonds were actually leading the stocks. Now, we also had this news that came out of the Middle East with the attack on the airport, and that seemed to spook the market a little bit. And instead of rallying past the point, the Sebastian, I don't know what you want to call it, but when the market pulled back, people already had their puts anyway. So the market just said, all right, we're not going to get the second leg of the sell-off. That's kind of what it seemed as Sebastian has put it on there. So maybe we can call it a Sebastian sell-off. So with that, we had the Sebastian sell-off where everything kind of bounced back a little bit. But I think that when we didn't get the follow-through to the upside with the buyers, the two things that were standing in the way of it were, one, the fact that we had the announcement out of the Middle East that we had that attack by the airport or whatever it was. And also, we still have the 4,500 mark in the SPX. That is a key number. We did get above it yesterday, but we did not close above it. So is it possible that we still can today? Yeah, I think we can, but we are a pretty decent amount away from it for the time being. So I think those two things are what are keeping the market from going higher at this point. And then the other thing is the fact that we did not get a rush of buyers in bonds. If this was really a scary thing and markets were going to sell off too frantically, then I think that we would have had a rush to safety. We've not had that. Bonds are still down on the day technically, not by much, but we did not have a mad buy-off to or a mad buy-off or a mad buy-in to the bonds. So that's what I'm seeing right now. I think that for the rest of the day today, we are just going to kind of putter around a little bit. And then I do expect a pretty decent move either to the upside or the downside after Powell speaks tomorrow.
All right, everybody. Let's see what all this speaking, this fear of Powell, will they taper, won't they taper Afghanistan? By the way, we do have that poll live right now, listeners. We'll update it in a little bit out there. We have that question for you, asking you, what is driving this turbulence? Seeing a little bit of turbulence coming back into the market out there. We gave you four choices: Delta variant, Afghanistan, Fed tapering concerns, or overall market valuation concerns. Again, if you guys have different thoughts, weigh in. Many of you have with your other thoughts out there. But yeah, those are the four choices at options if you haven't voted yet. Looks like you got clock's ticking, about 24 hours left on this one. Let's get on out to the major indices and see what is cooking. First off, we've got VIX. VIX at about 357,000 contracts. So putting up some numbers today after kind of dwindling of late. That ADV has dropped back below 400K. It's at about 389 right now, listeners. So looks like a good chance it could hit it unless VIX just hits a brick wall for the second half of the session. We'll see out there. And remember, on our last show on Monday, this time of the show, we had pretty much an M. They were at a million level for pretty much most of the other indices we were going to talk about. Today, that is not the case. SPY is surpassing a million, as you would expect. 2.65 million. If there wasn't a million on the tape right now in Spy land, something really weird would be amiss The ADV out there is 3.77 million, so a good chance it's probably going to beat that today. The S, though, the S already had 1 million contracts on the tape as of this time on Monday. 577,000 contracts on the tape today. The ADV out there is about 1.25 million. It's been holding pretty firm around that level for a while now. The Q's threatening 1 million, but not quite there yet. About 857,000 contracts on the tape. The ADV out there also about 1.25 million. So the Q's and the S both have about the same ADV, which is interesting because one of those is much beefier than the other. And small caps, at least the IWM flavor. We'll get into RUT and everything else a little bit later today on TWIFO. 312,000 contracts, so decent day, a little bit north of half of its ADV. The ADV is about 588,000 contracts out there right now. Let's move on out to single names. It's a pretty active, if nothing's blowing the doors off today, but it's a pretty active day nonetheless. Cost you 224,000 contracts to break into the top 10. That gets you to Pfizer, good old Pfizer. Number 9, we got BABA. Usually Microsoft's at that spot. Today, BABA has kicked it out of the top 10 and has replaced it with 230,000 contracts. It's actually tied with number 8, Bank of America, also there at 230,000 contracts. Number 7, Salesforce, 274,000 contracts on the tape. Let's just see what good old Salesforce is up to today from an underlying movement. Oh, a nice day today for Salesforce. Up nearly $12, or about 4.5%. So nice numbers coming out of Salesforce out there. Apparently, folks are doing a lot of CRM management out there these days. And Salesforce, good for 274,000 contracts. Number 6, AMD, 360,000 contracts. Number 5, Palantir, 388,000 contracts. Number 4, NVIDIA, back out there to the land of chip topsy-turviness. Good for 396,000 contracts. Number 3, yes, I said number 3, we got Tesla, 606,000. What could possibly kick Tesla to the number 3 spot? Well, it's one of the other meme twins. It's AMC at 639,000 contracts. Good day for AMC from an options volume perspective. Not so much on the stock front. It's off nearly 4% today, right around 42.25 right now. Looks like it had a nice little run earlier in the day. It was trading about, a little over 2 points higher. It sold off by about 2.25 points since the high around 10 a.m. this morning. So interesting time. Obviously, all that contributing to this paper we're seeing out there, and still managing to hold the crown today, ever so slightly, Apple. It's not quite at the 1M level, even like the 700K level. It's about 687,000 contracts right now, which, again, if you know Apple, that's pretty light, but it's enough for the number 1 spot. Let's look really quickly, see where our most biased paper is lurking out there today. And it's in Pfizer. 85% of Pfizer's paper coming on the call side of the ledger. Apple is actually surprisingly robust, and so is Tesla. Both of them are, well, not quite 50-50, but they're the closest we have to it. Tesla's at 59% on the call front. You don't see a 50 handle on the call front in the top 10 very often. And Apple's at 66%. So those are two of the least biased names in our top 10 out there today. Let's see what else is lighting it up. We do have the earnings move results, and earnings season reports hot off the presses from our friends over there in Orat's land. I was talking this with Dan yesterday on Option Boot Camp. He didn't even know we had this data. He was checking it out after the show. He's like, this is amazing. And I was like, I know. You should have been checking this out all this time. He does all that earnings domination stuff and everything. And these numbers would be very helpful to him. And so even he wasn't listening when I said we have these numbers. So yes, check these out if you're not listeners. It's the best deal in options because it's completely free. And if you even like to pay attention to earnings, you want to know what's going on, you want to know what's been going on in the past and how it compares to now, this is literally the only place you can do it. I don't know of any others. If there were, I would talk to them and get that data as well. And the only reason we did this, because like I said, this was an important area. You guys kept asking us for this. You're like, hey, what's going on with earnings and how do these compare to historical? And I would always say, well, there isn't a lot of data on this. Surprisingly, even though it's a question everyone asked, there was one Goldman study from like a decade ago, and that was really about it. And then one day I was talking to Matt, I said, you have all this data. Maybe we should start crunching this stuff. And lo and behold, the earnings move results, and earnings season reports are there, available in your hot little hands. TheOptionsInsider.com. Click on the Options News and Articles tab. Then you'll see a whole bunch of subcategories there. One of them is earnings reports. Click on that, and you can see pretty much everything we've posted for the last couple of years. And again, if you're not checking these out, you're missing out here. This week we had Best Buy, we have Intuit, we have Nordstrom. Yesterday we had Dick's, Salesforce, Snowflake, and Box. Today, we have Dollar General and Dollar Tree. So Uncle Mike's all a Twitter, all the buzz, his two favorite shopping destinations in one day. Abercrombie & Fitch, I should say his third. He loves to go around shirtless. You know, he's a former teen Abercrombie & Fitch model. I bet you didn't know that. Peloton and Marvell and Gap, HP and Dell today. Tomorrow, Big Lots. Let's see what we have today for some move results reports. So hot off the presses, what was popping off right before the show? Dollar Tree, Uncle Mike, pay attention. Dollar Tree before the bell here. They were at 106 and a third. They were pricing in 5.2%. Wow, get this. You know, we've been saying this for a while now. Maybe is this the moment? The moment we've been waiting for where the earnings worm begins to turn. Dollar Tree priced in 5.2%. They delivered 11.2%. And they've sold off almost 12% now. So apparently things not robust in the Dollar Tree land. That's interesting because Dollar Tree and those types of stores usually a good bellwether for, you know, the lowest areas of the economy and how they're faring. I know for a while there, they were actually doing pretty well. So interesting to see that is not the case right now. Let's see what's going on in Dollar General land. They were also today before the bell. They were at 234 and 3/4 when they went into their announcement. They were pricing in 3.8%. And they also outperformed. They had delivered, as of this report, 5.8%. Wow. Interesting stuff. And they're off. They've mitigated a little bit now. They're off about 4%. But still, a little bit of outperformance on the vol front. Maybe things not quite that rosy in the dollar sector of the space, which, again, is an interesting bellwether, interesting little canary in the coal mine for what's going on with the rest of the economy. Salesforce, we just talked about them. They were yesterday after the bell. 260.85 is where they were going into their announcement. They're pricing in 5.4%. They delivered 4.7%, right about in line with those expectations. I think maybe, though, today, let's see if that number has increased. Again, this is right before, they're up about 4.5% now. So a good run, but not quite exactly what they priced in. Snowflake, another one of these hot IPOs everyone was all fixated on a few months ago. They were at 283.76 going into their announcement. They were pricing in 7.2%. They delivered 5.2%. So that's kind of more along the lines of what we expect these days. Box, they were yesterday after the bell. 25.64 is where they were going into their announcement. They were pricing in 6.3%. They delivered 2.6. So that sounds like a pandemic earnings report if ever I heard one. Let's go out to the beauty sector. ULTA, they were yesterday after the bell as well. 389.90. So nice lofty price out there in ULTA land. Ooh, this is about what you expect. They were pricing in nearly 6%, and they delivered 0.6%. Now that's an earnings season report, an earnings remove report for the pandemic era. That's it right there. So before we get all hot and bothered, not everything is blowing the doors off. Also, I should say, they tend to revise these numbers over time, and they are starting to revise some of these numbers. So week 4 on our earnings season report was at about a 101. So it was at an outperformance. Now it's at 98. So just ever so slightly underperforming. Week 5 at 102%. So right now the season holding at about an 82%, which is still the best season we've had pretty much since the pandemic began. But it's not all knocking the covers off the ball. But still, interesting things afoot. Let's look really quickly after the bell today, what we got in store for us today. A lot of tech names. We got Dell after the bell. They were at 102, pretty much even. They're pricing in $5. In the past, they've moved $3.75. So if past is prologue, that's not going to work out well. Hewlett Packard, $29.39. They were pricing in $1.72. In the past, they've moved $1.53. So far, 2 for 2 with more volatility. Marvell after the bell, 63.20 is where their stock is. 4.25 is what they're pricing in. The past, they've moved $3.18. Wow. Peloton, 116.25. They are tomorrow after. Today after the bell. Today after the bell. 116.25 is where their stock is. 9.04 is what they're pricing in. In the past, they moved $7.63. Oh, I'm seeing a bit of a theme for today's numbers. And let's go to Big Lots as well. 57.84 is where their stock is. They are pricing in $5. In the past, they've moved $5.99. That sounds a little bit more sensible in this environment. We shall see. Is this the moment we've been waiting for, listeners? Or you think it's just a blip on the radar? Let us know as we keep on rolling into the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody, welcome to the Odd Block, the portion of the show where we unleash the Eye of Sauron, see what it fixes its gaze upon today. And today we're going back out to a name we first talked about recently on the Odd Block not too long. I think one of your listeners actually sent it in. This is the Options Oddity Show, I should say. One of you pro members sent it in. Altimmune Inc., ticker symbol ALT, A-L-T. Trading right now $14.40. Actually up about 60 cents or about 4.5% today. So not a bad little run for that. Let's see. A year ago, it was trading $18.42. And let's see. It's had an interesting year. Sold off pretty hard. By the way, obviously, this is a pharma biotech name. They sold off from about 18.5 last year to all the way down to their pretty much 52-week low of $7.80. By November 9th, they're trading $7.80. So they got cut more than in half. And they kind of rebounded about a month later or so. They were trading in December. They were trading $13.82. So they had more than almost doubled pretty much since that low. So that's a nice little rebound. And they bounced around there for a while. And they had in that 13 to 14 range. They had another nice run in January. They popped from about $13.32 by, mid-February, they were trading $24.31. So again, almost doubling and more than 3x from their lows of the year. But then, like most biotechs, they couldn't maintain it. They pretty much promptly gave it up. By March 4th, they were trading $13 again. So nice little blip there right in the middle of their chart. And they tried it a few other times. They got up to 17 3/4. A couple weeks later, gave it up again. They got up to about 16 and change on June 25th. It looks like the bottom really dropped out from under them there. Then they sold off down to 8.43. So they got cut pretty much in half between the last week of June and the first week of July. They got clipped pretty aggressively. But then they've been on the upswing again. Since the end of July, they started trading north $9 July 30th to where we find them right now, $14.41. So this is kind of one of these little engines that won't quit. It rallies hard, sells off just as hard, and then it tries to bounce again, and with middling success. So that's kind of the year that was. Net on the year, they're off about $4 or about 21, almost 22%. Let's see what our Eye of Sauron found out here today. Listeners, one of the larger single name prints we saw going up out there today as well. Again, active day, but not a blow your doors off kind of day. And looks like we got here a bit of the old upside call overwriting, as the Rock Lobster might say. 10,000 of the SEP 20s going up for about 25 cents. Actually, a dime off the offer. This market was pretty wide, though. It was 15 cents at 50. So not a ton of liquidity out there in everyone's favorite name. Altimmune, if you're wondering, the ADV out there is about 3,000 contracts. So this one trade is more than 3x their ADV, hence that market. So they got them off for 25 cents. That's actually not a bad level given, what we see out there. If you're wondering, let's see. The stock first off was much lower, $13.79. And let's see, the vol is pretty much what you'd expect for a biotech in the triple digits, 121.5%. So interesting time. Mr. Rock Lobster is an interesting one. Looks like someone drawing a pretty sizable line, not at the 52-week high. That would be closer to $25, but substantially north of where it is right now at the 20 handle. And if you look at it where it was just, a few weeks ago, it was trading in the 8 to 9 handle. That's more than doubling at that level. So they'll probably be more than happy to dump some at the 20 strike. What are your thoughts on these upside call overwrites for pretty decent size here in Altimmune, sir?
So I think interesting with these 11. So there's a lot of, I'm looking at these ALTs. There's also a lot of activity on the 11 strike, which looks like it could be closing paper. And then here, and then somebody is, again, I find this, I have to say, I feel this trade vexes me. I'm vexed.
Have you been watching Gladiator again?
I was about to say, I was trying to feel, and because I'm kind of in the mood of that guy. What was his name?
The Emperor Commodus, sir.
I'm channeling my inner Commodus because I am a little grumpy. But other than that, I think a SEP 11s, I think there's a little closing action there. And they might have accommodated that 24-cent price. Because our test, right? Something trades 24 cents And now there's a 55-cent spike bid in the SEP 20s for all you want to sell. So usually when you see that spike bid that's up there, something's that fill was not. I don't know. I think that 24-cent fill felt like it was accommodated. I think somebody closed the 11s, took some money, and rolled up to the 20s. That's my take. If I do a little extra dive, I don't think this is a line in the sand sale, personally.
As I recall, what we talked about in the Options Oddities program was something similar. It was a size overwrite, and it looked like something else on one end, but then it was actually closing that trade. This one is opening because there's not enough OI, but I'll have to look on what strike that was.
So the 11 would be the closing strike on 16,000. So you and I, after seeing, there's very few coincidences in the large blocks and in obscure stocks. Generally, there's usually that one big customer. For anybody that's traded some of these stocks before, there's usually like one big customer that just likes to do their thing, whatever their thing is in the stock. And it would appear to be this, but there's definitely a to be watched one, because the reality is if they close the 11s and they roll to the 20s, I mean, they're looking for some continued hot action here, as far as I can tell. Because it was the stock was $17 not very long ago. They must have lost approval on something. Stock dropped to sub $9. And this is where I feel like that person gets in again, closes, rolls 11s to 20s. And maybe the 20 side was part of, they had to give the 11 side for a relatively inexpensive price. So I'm doing a little arithmetic there, but I don't see the let's see here. I'm just looking at some volume. Yeah, so I'm seeing some of the SEP 11s trade under the bid, which could set up the cheaper price on the 20s. So I'm using live vol. I'm cheating a little bit here because that's a good product for trying to fish out information. But that's kind of how I see this one. I don't know. I don't think the ghost is up here in this Altamute. I think every stock that's hot. Do they have a COVID therapy? Do they have a potential antiviral? Like any hint of that at this point right now, that's like a double in the stock. So
and the stock has doubled like 3 or 4 times over the course of the past year, and then promptly giving it all back up.
Exactly. So I mean, I don't think the vol is up substantially. So I'm not feeling right on this one, I have to say. So I was vexed by the initial take on it, but I'm feeling firmer in the camp of somebody's rolling and putting their happy on for 24 cents on the 20s. But the 55-cent spike bid is out there.
Putting your happy on the 20s.
That's not going away.
Yeah, that's a weird one, because you're right. If you dig in a little bit more, you'll see at the time this went up 16,000. Well, before this went up, 16,000 of the 11s went up against also at the same time 20,000 of the OC 18s. So they could have been buying out their 11s, rolling out to October. But then like 9 minutes later, someone also put up these 10,000 of the SEP 20s. So was someone inspired by that trade, decided, hey, I want to come in and dump some of these? Or was it the same guy deciding to do a bit of the old house money roll because he's doing more in the second leg, and then come in and on top of it also sell some of the SEP 20s? It could be sitting on a ton of stock and decide I'm just going to draw lines in all these 20 lines. But either way, it's interesting. We'll come back to this one, listeners, and see how it fares in a little bit. Speaking of coming back to some, our cup overfloweth with trades to watch. So let's go check out some of these as well. First off, we're not going to dial the Wayback Machine too far. We're only going to dial it back couple of weeks to August 9th here to MazTech. This is ticker symbol MTZ. Let's see. This is a utility out of Coral Gables, Florida. So you think, oh, that's kind of sleepy. Or utility services, I should say, really. The stock right now, well, I won't tell you where it is. That's a bit of a spoiler. At the time, back on August 9th, profile, I should say, 5,545 of the AUG 85 puts going up through the bid for 43 cents. This was about a 44.5 vol at the time the stock was. These options were bid for 45 cents. So someone really crushed them to get 5,500 of them done. This is, like I said, about a 44.5 vol. And the stock at the time was 92.58. And let's see, there were no earnings in this cycle. So this is straight up kind of a line in the sand, put sale to the dark side here. And not crazy, not outlandish. We didn't hate it. We didn't love it. The stock was $7.50 away, so it wasn't super aggressive. Let's see. And then let's see how these things fared. As of expiration, the stock went out at $89.48. So it looks like the stock worked out well. Let's just see if over the course of the past month, if there were any moments where these things, you really had to sweat it. It looks like the lowest it got was right around expiration, pretty much, 88.77. That was kind of about it. So a few handles away, but not quite really making you sweat too terribly. And then it kind of bounced going into expiration. And right now the stock is at $92.81. By the way, if you're wondering on the year, it's been a good year for MasTec. A year ago, it was trading $45.54. Right now, it's pretty much doubled. It's 92, almost 93 bucks. And in between, it got up to 120. Back in June, it got up to about 122 actually. So it's had an even better year. It's given up some of that of late, but still, net on the year, it's been a decent year. And someone decided, looks like, to draw some of these 85 puts. Again, if you look at this chart, that 85 strike could have some risk to it, more than you think, because this thing was trading, again, $40 not too long ago. So you could be wearing out those puts. But looks like our friend here, it worked out well, Mr. Rock Lobster. Surprise, surprise. You come back on the show, and once again, line in the sand put folks are making some money, sir.
Well, I think if you, again, smart put writing is still one of the best ways to go if you want to make money trading options. Although, as I recall, being much maligned last year at this time. In June and in April, and I was getting the evil eye on that concept, and lo and behold, wasn't a bad idea. So as TOSAW well knows, you buy stocks cheaper than they are, and you sell them higher than the market wants for them. And generally, that's a good recipe for investing with options. But I got you all sideways at the beginning of the show.
There you go. So yeah, line of sand puts working. The Rock Lobster is back. He's a happy carrot. Let's see if we can go 2 for 2 here on the line of sand puts. We'll dial the Wayback Machine now back to August 2nd, a whole additional week, to BILI. This is BILI Inc. This is an ADR out of China. Ticker symbol BILI, BILI. At the time, back on August 2nd, we profiled 14,185 of the AUG 70 puts going out on the 13th. So this was in the weeklies, going up for 18 cents. Again, 14,000 times. The IV was about an 88, almost an 89 out there. And the stock at the time was $91.98. This line in the sand looks like it got a little bit closer to the fire. There were earnings. Looks like this person tried their hardest to avoid them because the earnings were on the 19th, the following week, and they clearly put their trade on to expire on the 13th. So they don't want to deal with that earnings noise, which, again, I can understand given how we've seen it out there of late. So the stock did close south of where it was. It dropped quite a bit from $92. By expiration, it got down to $74.10. So pretty rough run there. And actually, yeah, you know what? This guy's lucky he didn't go through earnings, because the subsequent week, the stock got down to $64.33 right on the earnings a day. So this guy was lucky to get the heck out of Dodge when he did. Stock closed, like I said, on expiration, $74.10. These puts were all still open. By the way, I should mention the other puts in MasTec were still open as well. The trader out there made close to $250,000, about $240,000. And we're seeing similar levels for these puts in BILI as well. They were still open in expiration. Looks like paper pocketed about exactly $250,000 on these bad boys. Mr. Rock Lobster, not bad. What do you say? Your significant other's Ferrari money, sir.
Well, yeah, I just want our listeners to notice one thing. It always seems to be around that number. How many times have we done line in the sand puts, Mark? how many years? 5, 6, 7 years, something like
We've
that.
profiled many hundreds probably by now.
Okay, many hundred. And they all tend to fall within like the $200,000 to $400,000 range, right? So now I think I personally think that, yes, the girlfriend Ferrari money is, some people, or boyfriend, never know. They might need several boyfriends or girlfriends to keep them in like a new Ferrari every 6 months, possibly. So clearly this strategy helps pay the bills. Now, for the average person, it's hard to generate $250,000 in premiums because the margin is ridiculous. However, you look at this and they have another winner on their hands. So they definitely look around for the type of puts they want to sell. But again, I always believe that this put sale is strategic. They want to own the stock. They're stock buyers. They're funds that are stock buyers. And if they don't get the stock they want, they get, what I would just call like a meaningful 50 basis points for the month or 25 basis points or something like that. So it has to kind of get to that level where it moves the needle for them a little bit, or they're taking the stock. So that's as a strategy, I see that. And again, we've also commented before that there used to be floor traders that made their living totally by selling these junk puts. And a lot of them, the guys that did it and then just retired did well. The guys that waited through 2008 probably left a mark. But other than that, as long as you have the money to take the stock, selling puts is a good strategy because ultimately it's a stock buying strategy at a lower price. So people got to remember that don't over leverage yourself with this type of trade. So I will give you my friendly reminder. Leverage is the thing. Negative leverage kills you in options. So you never want to have to close something. If you could always say that when you put a trade on, I don't have to close this trade, you're in a good position. If you say, I need to close this trade because I have problems, that is a bad place to be. So you don't want those 4-letter words trading options. Need, wish, want, or hope. If you find yourself using any of those 4 words while you have a trade on, trade's either too big or it's going to lead you down the road to Palookaville. So we don't, this is not it's not a game of hopium here.
Are you saying I shouldn't be saying I need Doge to pay for my kids? I shouldn't be saying that?
Yeah. Well, you need and want sometimes are different things.
Hey, I need it.
I am sure
I need it, baby.
That you do have a very efficient wife, so I'm sure she'll figure out a way to pay for your kids' overly priced schooling there in the Chicago area.
Yes. Well, I dump all of my earnings into Doge. It's always a good strategy, though. It's talking to you folks. Let's get at it. A little bit of the old mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the mail block.
All right, let's get after it. I mentioned at the top of the show, you guys are out there voting hot and heavy in our question of the week. We've seen a lot of turbulence in the market right now. What do you feel is the main driver of this latest round of volatility? Gave you 4 choices: Delta variant, Afghanistan, Fed tapering concerns, or market valuation concerns. Mr. Uncle Mike, you had your choices on Monday. I believe you were on the Fed tapering side of the fence. I could be mistaken. But if you have an update to that, have at it. And then more importantly, where do you think our audience has fallen, sir?
I'll go with Fed tapering, and I'll go with that. I think that tomorrow's going to be a big thing, one way or another, and that's where I'm at. And you talked about the words that Andrew had said. It made me think of the things that something my dad used to tell me when I was a little kid. Hey, Dad, I want this, I want that. And he would respond to me, want in one hand, spit in the other. See which hand gets full first.
Huh. That's a new one. I have not heard that bit of folksy wisdom. So Uncle Mike's dad, folksy wisdom coming on. That's why he's the man from the mountains. Listeners, let's go on out to Cracking me up here. Let's go on out now to the land of the lobster. Mr. Lobster, you haven't had a chance to weigh in on our contentious poll, sir. The 4 main issues of our day. What is driving this latest round of turbulence? What is your vote? And more importantly, what do you think our audience is voting for, sir?
I think my vote right now, I would say, is the taper. That would be the number one, because Powell is not staying on a path with it. And he keeps using the Delta virus as his foil. So it's like, Delta bad, so maybe we have to slow down on the taper. Or the Delta's not so bad, maybe we can go and, or whatever it is. It's just an economy growing at 5% does not need the Fed to be buying bonds at all. 0, in my opinion. So I don't know what kind of rationale he needs at this point, but I think instability over rate policy is still the thing that's making the market jiggy. And it makes, I think, the more aggressive technology stocks, which are, at a pretty high price right now, and it makes those jiggy too. So I think that's the number one driver at this point.
Making the market jiggy. I got spitting in my hands on one hand. I got jiggy markets on the other. You two full of your folksy sayings out there today. Let's see what our folks are full of. And yeah, they're full of the Fed. It's 53.6% right now saying Fed tapering concerns, 20.6% saying the Delta variant, 14.4% saying market valuation. So market valuation way down the list. And then Afghanistan way there at the bottom, 11.3%. You got about a day or so left. Clock's ticking, a little bit less now to get in there, listeners. At Options, make your voice heard. If you have other ideas, some folks sending in some political ideas, we'll skip over those. Instead, we got cheese. I keep saying this one wrong. Cheap risers. There we go. He said, dude, hashtag all of the above. That's like that. I think of that in like a Crush from a Nemo type of voice. Dude. He said, funny, this poll came out just as I opened a SPY call diagonal spread this morning, but he thinks it's a little bit of all of the above. I think you could probably make that argument, as Andrew was just saying, the Fed, a lot was driving the Fed is the Delta thing. Of course, overall valuation is on everybody's mind these days. And you probably have a little sprinkling, a little smattering of Afghanistan and geopolitical instability on top of that, kind of the sprinkles on the sundae of worry. And you probably could have an argument for all of those there, but we've got to pick one. And then who is this here? Oh, Bugs. Dealing with Bugs. That's a weird handle. Just sent in a gif of, I guess, a fortune teller woman. He's trying to predict the future. You should send that in for our crystal ball segment there, Dealing with Bugs. That's where we bust out our crystal balls. But unfortunately, we got to keep rolling, listeners. It is time for our final segment. It is time to go around the block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody, welcome to Around the Block, the portion of the show where we tell you what we're keeping an eye on for the rest of this week into the weekend. We'll start with Uncle Mike, sir. What are you watching as we head into the weekend?
Watching Jackson Hole, or the virtual version of it, whatever you want to call it. I think that's going to be the big market mover tomorrow, one way or the other. And I'm looking at that and seeing if we can actually close above 4,500 in the SPX. We did get above it yesterday, but we were not able to close above it. So those are probably the two main things with which I'm watching.
And Mr. Rocklobster, same question for you, sir. What are you keeping an eye on as VIX dances between your zones, sir?
Yeah, I think that's what it is. You're right. It's between zone 2 and 3, like 18, 19. And that's where VIX is. And it's how the market digests all this Powell stuff. So I think that's what we got as far as that goes.
I missed the crickets, sir. They're back. The Rock Lobster's back when we've got the crickets here on the show, listeners. Enjoy. Unfortunately, that music means we ain't got time for no crickets. We got to keep on rolling. If you're listening live, listeners, we'll pump some fun stuff into the live chat. Then we'll be back in exactly 30 minutes to break down the weird, wild, and wonderful world of futures options on TWIFO. I'll be joined by Virginia McGathey. She's a commodities expert over there, and a lot of the ags and everything else. That's kind of some of the more head-scratching stuff going on in the world of commodities and futures options will help us break it all down. Of course, we'll get to equity volatility and a whole bunch more coming up in exactly half an hour. If you listen after the fact, just hit next on your device of choice, and we'll be back at you post haste. But before we go, let's go back around the horn. Let's start with the rockingest of lobsters. Mr. Lobster, if folks are excited that you're back and they want to check out your, capital gains, where should they go? What should they do?
Yeah, capital gains, starting off quite nicely, I might say. Or Law Trade Club, or Trading Legion, or any of our products that come up with good ideas to help you make money. Go to optionbit.com memberships and check it out as we grow exponentially. We're like twice the size as we were last year and twice the size of the year before. So we must be doing something right. So that's a good thing. And very excited, and on we go. Keeping me busy.
It's all those endless emails from the meatball. Growing the base there, sir.
Yeah, that is the secret. That's the secret sauce.
Optionpit.com is the place to go to learn more. Mr. Uncle Mike, same question for you, sir. If folks want to hit you up about any of this madness going on in the market, where should they go? What should they do?
stcharleswealth.com is my website, or feel free to follow me on Twitter at Mike TOSAW, TOSAW. I try and put out as much content as I absolutely can between just random videos and tweets and weekly blogs and all sorts of things. So check me out at Mike TOSAW, TOSAW.
Mike TOSAW on Twitter. stcharleswealth.com is the place to go for all that info and a whole bunch more. We got to get on out of here. But again, we'll be back in 27 minutes now with Twifo, and then back again tomorrow, noon Central, 1 p.m. Eastern, volatility views for all of you. And then after the fact for the Secret Handshake Club out there, 2 p.m. Central, 3 p.m. Eastern for Options Oddities. And we're back again on Monday, another episode of the Option Block. We'll see you then.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.